Hi and welcome to Fincon Accounting. In this video I'll be demonstrating some features the Fincon Accounting system has that just might be exactly what you need to grow your business or help it run more efficiently. Note that I'll only be touching on the most important capabilities as Fincon Accounting has just too many to get into, and we don't want to make the video too long. Let's get right into it. Firstly, it's important to note that Fincon Accounting is a stock-based accounting system. In other words, the focus and features allow for flexibility, accuracy, and control over your stock control, whatever that might be. But it also allows you to do your accounting. And this is what sets Fincon Accounting apart from the other accounting software. It's a stock-based system that does accounting, and not an accounting system that handles stock. You'll be able to see what I'm talking about as we go through the functionalities throughout the video. The Fincon Accounting system was written according to industry-specific needs and has grown to what it is today. In this video, we'll be using a demo company in order to showcase what the Fincon Accounting system can do. I've specifically taken a clean system. It has some stock items already created and so on, but I want you to see what is involved when you start. We know that moving from one system to another can be daunting, and it's absolutely crucial that everything balances and is defined. Note that I'm skipping the installation and registration process. We guide you through it on our knowledge base, so going through it now is not necessary. The very first thing you would tell the system is what your financial structure looks like. You'll see when you go through some of the menu items, certain features will be grayed out. This is because you need to set up your financial structure first, meaning when your financial year end is, and which financial months you are currently in. In other words, which month will be your take-on month on the system. In this instance, let's just use a normal financial year end for February. And let's say we want to go live the 1st of September. We would then say August is our take-on month, which would set your period to 6 because March is 1 and it would go on from there. Now Fincon is period-driven. It caters for 2 financial years, in other words 24 periods, which can be open or not, depending on how you set it up. When you run out of those periods, i.e. when you get to period 25, period 1 to 12 is archived, period 13 to 24 is renumbered to period 1 to 12, and you put on period 13 again. So you always have the prior year's information available for reporting purposes and also for history. You can always get back to the archives, you just cannot change anything in the archives. So it's important to make sure everything is in order before you do your rollover. Okay, so as I've mentioned, some of the features were grayed out before we established your financial structure. But before you will be able to use the full functionality of the system, you will need to re-enter the system. So let's quickly do that. Now that we've set up the financial structure, we can start setting up the system for trading. The first thing you'll do is load your stock onto the Fincon Accounting system. Note that the following is part of the take-on process and does not refer to your normal day-to-day trading process. So in this window, you'll be able to create stock items and set up all the definitions for the item. We also have an import feature where you can import multiple stock items via a CSV file, making it a bit easier if you have a lot of stock items to get onto the Fincon Accounting system. Our knowledge base has guides on how to do this, as well as the template you'll need to use to import the items. You can also click on the Help menu item if you need more info on this feature. I'm just quickly going to create an item. So you will enter the item code in the item number text box. This window might seem intimidating at first, but there are so many great definitions that you can set up. For instance, if you look at the stock definition and stock locations, Fincon Accounting caters for 40 locations, and each location can have normal, faulty, swap out, or supplier or on-order stock. Other stock locations are also available, but we'll get into that later. Now if you look at it, normal stock is your trading stock, for instance, stock that you buy and sell. When you do a goods received voucher, your stock will go into normal stock, and if you sell it, it will go out of normal stock. Because of the nature of the industry, Fincon Accounting has a facility to do a swap out. If you do a swap out, you can take the item either from normal stock or swap out stock, depending on how the system has been set up, and the item the customer returns will then go into faulty stock. Let me just give you a quick rundown on what swap out stock is if you're not sure. Usually certain companies that do imports of, let's say, motherboards, they bleed off a certain amount of units that might be faulty, and when they're added to the system, they were allocated to swap out stock. So they already know how much trading stock they have and how many items might be used when a customer returns a faulty item. You can set up whether you'll be using swap out stock in the company parameters. So immediately your stock is organized. You know exactly which stock is in which location and how much of each stock type you have. So for example, if you use the stock count list report and set up the parameters according to what you need to see, you'll be able to see how much stock you have in each location. You can see a list of all your items, choose which location you would like to view, and then have a great overview of it all. You'll see here that we also have a consignment stock type. A lot of our customers sell online through Takealot, for example, and use consignment stock. You'll see we also have work in progress stock. Our system has a fully fledged production system for customers that work in the chemical industry, for example, and need to work with multiple items to create a final product. So you'll see that it gets quite versatile and caters for a lot of different uses. Let's have a look at some of the definitions you can set up for a stock item. Firstly, you can set whether the item has a warranty and for how many months and days the warranty is valid for. You can say whether the item has a serial number, whether the item must be on your price list, or whether the item has sub-serials, and so on. There are an array of definitions that can be added to any item you add to the system. So after you've created or imported your stock items, you'll create a stock take list. As I've mentioned before, this is part of the take-on process. You won't use a stock take to bring in your items when it comes to day-to-day trading. In that case, you'll use a goods received voucher. We'll be going through the normal trading process later in the video. So when it comes to the stock take list, you can do one for every branch, and you can call it whatever you want. It will pull all the items that you have and put it in your list. You can also manually choose which items should be on the list and which should not. So this will be the list of items you are going to count. Once you're happy with the stock take list, you can save it. After this, you will enter the stock count. Call up the list, and then enter the counted item values. You can also import those values by using a CSV file. Once the stock values have been entered, you can call up a discrepancy report to see what the value is and then do an update. You can also see the value on the update, so I'm just going to do an update. If you're happy with the stock take and the values, you click Accept and enter I am sure. The stock is now on the system, according to what was entered in the stock count and accepted in the update. When you pull the stock count list report again, you'll be able to see the values as they were entered and updated. After this, you can bring in your serial numbers. You're only able to do this if your serial number tracking is enabled. You do this at the company parameters. Let's quickly do that and make sure it's enabled. Okay, once that is done, you can go ahead and perform the serial number take-on if you have any. You're able to do this manually or by importing a CSV file with the serial numbers using the import facility. When entering the serial numbers manually, you can use the range scan function if the serial numbers are sequential, or scan the physical product you have on hand. After this, you're ready to start trading, and when you're ready, you'll accept the stock take-on. The moment you do this, the system will move you into the next financial period, which will be the month you want to be trading in. Accepting the stock take-on routines puts the opening stock values in. If you re-enter the system after this, Fincon Accounting will ask you to enter a till because of its POS function. This happens if the user logging in has access to a till. The main difference between the POS function and the normal Fincon Accounting. After doing an invoice, the POS function will ask you to enter the payment and will keep a day-end information and so on. So it works well if you have a shop front and people come to pay for the products at a till. You'll see that most of the menu items are no longer grayed out, as you can start trading. But the accept stock take-on item is grayed out as you've already done this, and it cannot be done again. For the rest of the take-on process, you have up to period 24 to complete. But if you do not bring in the opening balances for your customers, your credit limits and things like that will not be operational. If you have created all your accounts, you can synchronize the financial take-on and then enter the take-on balances. When you're happy with everything, you can accept the financial take-on. You can do this by doing customers only or supplier only, or by accepting all. There are extensive guides on the stock take-on and financial take-on process on our knowledge base, which will help you through everything step by step. You are, however, not forced to use Fincon Accounting's take-on routines, which you will specify right at the beginning. You can then bring in the information yourself. The difference is when you let the system do the take-on for you, you will not be able to change any values until everything has been completed. Whereas when doing it manually, you have control over the values. However, letting the system do the take-on leaves less room for error. Okay, so now when you're trading, you can pull a stock count list as I've shown you earlier. This will show you what you have in stock, but you can also pull up a serial number count list, which will compare your inventory against your stock. This report exists specifically because scanning a serial number in Fincon Accounting does not put it in stock or take it out of stock. Only when doing the goods received voucher puts it in stock, or doing an invoice will take it out of stock. So the serial number is only being tracked. Hence, you physically could have a difference between the value in stock and the number of serial numbers you have. There are certain processes in place in Fincon Accounting to deal with the serial number side of things. For example, when you do a stock take and create your list, you can scan the stock items. You can validate that scan file and keep doing the stock take whilst trading. By validating the scan file, the stock that has been sold in the meantime or transferred will be adjusted accordingly. You also have a way to write off a serial number not found by using the serial numbers not scanned function. This is ideal when certain serial numbers are missing. This does not take it out of the system, it only takes it out of the stock take. So by looking at these processes that are put in place, it's safe for us to say that it has been the best way to work with serial numbers over the years. So that was a quick overview of the take-home process and serial numbers. The take-home process, meaning what you need to do right in the beginning when starting to use Fincon Accounting. Now let's look at the actual trading process, what your day-to-day use of the Fincon Accounting system might look like. Let's start with the selling side of things. The entire trading process is available in Fincon Accounting. You can do a quote can become a sales order, and a sales order can become an invoice, which means effectively you can enter the quotation, import the quotation into a sales order, allocate the serial numbers to the sales order, and then make the invoice. I'm just going to do a quick run through to show you how this might work. Okay, so by opening the function to create a quotation, you'll see that the first thing it requires is for you to enter a customer repair order number. This is because you might have had something in the workshop which you now need to provide a quote for. But in a normal situation, you'll start by entering the customer account number. Fincon Accounting has a great search function that will help you to find the relevant account number, quote number or sales order number, and so on, especially if you have too many to remember. In order to use it, you'll click in the relevant text box, in this case the account text box, and either press F2 on your keyboard or right-click in the text box to bring up the search function. There you can specify your search options, for instance the account type, which aspect of the account you want to search for, and enter positioning value. In this case, let's say I want to search per account name, and I can only remember it has the letter J in it. That's what I'll enter in the positioning value text box. I'll select to search on all words and click OK. A list of accounts will come up that contains the letter J. Now this is a very simple example, and I don't have that many accounts on this demonstration company, as you might have when you start trading, but this is just to give you an idea of how it works. The fields on the list are active, and you can click on them to sort the content as you need it. Once you found the correct account you were looking for, just double-click on it and it will be entered on the quotation. This search function is usable in most windows and can make it easier to find what you're looking for. This will work for quotation numbers, sales order numbers, purchase order numbers, and so on. Once the correct account is entered, all the customer's details will be entered automatically. If the customer does not have a sales rep assigned to them, you need to enter a sales rep code. If the customer is a rebate account, it means that the system will hold back a certain percentage as specified when setting up the customer into a control account and not present it as profit made by the salesperson. While we're busy with this, the system also has a supplier rebate. When a customer sells a certain product to an end user, they get a different price. They get a rebate from the supplier. So in order for the profit to be correct, on the system these need to be in place, for the customer account as well as the item that is rebatable. You do this by changing the item type to 5, which is a rebate item, and specifying the rebate account and amount. So when you look at the quotation, for instance, and enter an item, which is a rebate item, you can click on margin and you'll see it's applied there. This is worked out on the last purchase price of the item, which can be set within the company parameters. This makes it so convenient to track your profit. Once you've added the items on the quote, you can again look at the margin by clicking on the margin button. but you're also able to change that amount and it will change the prices of the items automatically. You can also change the total price of the quotation at the bottom of the screen, and the correct prices will be calculated accordingly. The other thing to note, if there is a U at the bottom of the screen, it means there's a URL tied to the specific item you have currently selected. You can make this URL anything you want, which would be relevant to your business. Images can also be assigned to items, and image sizes can be up to 4 megabytes. They're scalable as well. When doing a quotation and you do not want the customer to see the actual price of the item, you can group the items. You do this by adding a group code, adding a group description, and when you want to email the quotation, you select Print Group Descriptions. Then it looks like this. You'll only see the group description on the quotation being sent with the total price. So like you've seen, when you save the quotation, the option to print or email the quotation will come up. This happens with almost all of the trading windows. For the purpose of this video, I won't be printing any documents, so I'll be clicking cancel most of the time. But I just wanted to mention this so that you know about the printing and email function. Once the quote has been done, you can create a sales order. You can call up the quote and amend as required before you create the sales order. In this window, you'll be able to see how many of the items you have available or how many you have on hand at the bottom of the screen. If you'd like to see a breakdown of this, you can press Alt and O on your keyboard. There are many shortcut keys in Fincon Accounting. If you look at the Help file and go to System Overview, you can click on Grid Shortcuts and you'll be able to see which shortcuts you can use. When it comes to sales orders, we also have the Approve Sales Order feature, which is set in place for businesses that want to receive the money first before they invoice the customers. This can be set per customer or at the global settings. Okay, so let's have a look at how to add serial numbers to a sales order. You'll go to Serial Numbers, Scan Serial Numbers, Allocate Sales Order. You'll start by entering the sales order number, click Start Scan, and then enter the serial numbers. On this screen, you'll be able to see your available stock for the item, as well as how many are on order. Once you press Enter, the scanning will be completed. If you had more items, you would just have continued until it had been completed. Now you'll be ready to create the invoice. When you enter the sales order number, all the details will be called up. When you're happy, you can go ahead and accept to save the invoice. So if you want to print or email the invoice, you can choose different layouts of the invoice. This is something you'll set up as well. The invoice can look exactly how you want it to. You can add a logo and so on. The serial numbers can also be printed on the invoice. You have a lot of flexibility. On the reporting side of the process, when you do a customer account inquiry, you'll see the invoice you just created. You'll be able to see how much the customer owes you and view the invoice again if you click on it. Okay, so when the customer pays, you can process a payment. Let's do one. You'll go to Debtors, Debtor Payments, enter Payment Received. You'll enter the customer account number in the Account column and enter the amount of the invoice we just did in the Amount column. Click on the Outstanding column, press F3 to allocate it, and specify how the payment was made. In this case, I'll say it was an EFT, but you have options like cash, check, credit card, and so on. Just a side note, when it comes to a foreign customer, you'll enter the foreign customer whilst using your local account. You can change that as well if you want to. You'll enter the amount in their currency and allocate it to the correct invoice. After this, you can enter the amount in your currency and the exchange rate will be worked out. Once you're happy, process the payment by clicking the Accept button. Now the payment is processed. The big difference between Fincon Accounting and just about any other system is that if you look at the customer account again, using the Debtor Account Inquiry window, you'll see that the invoice has been paid, but the money is not in the bank yet. So it's called an Undeposited Payment. In order to put the money in the bank, you need to do a bank reconciliation or bank statement reconciliation. The difference between the two is on the one you'll enter each payment manually, and the other you'll be using a bank statement to import the payments. In order to do this, you'll start by defining your bank statement. What does it look like? And pre-program it. So you'll enter the definition name, add keywords, define the rest of the settings in order for the system to easily allocate the payments on the statement. You can define the format of the statements according to what your bank statements look like. Define the columns and so on. Using the bank statement reconciliation will make the process a lot easier, especially if you have a lot of payments to bank. But let's look at what you'll do when you do it manually. Enter the reference, the date, the entry type, which was a receipt in this case, the receipt number, and click Accept. Now that money is in the bank. If you look at the customer account again and refresh the screen, you'll see that the account now balances and the bank reference is now the reference you entered, and the payment date will reflect what you entered when doing the bank recon. Okay, so that covers the customer sales side of things. Now we can have a look at your buying process. You'll start the process with a purchase order. I'm specifically going to use a foreign account so that you can see the features pertaining to a foreign account. The principles will be similar for a normal supplier, but this will just show more intricate features. You'll see when you enter the supplier account number, the currency will show on the right-hand side, and the items entered will be displayed in that currency. The amount is based on the exchange rates you currently have entered on the system, as well as the last purchase price of the item. Let's just quickly enter an item to purchase and save the purchase order. When you've accepted the purchase order and received the goods from the supplier, you can create an Import Goods Received voucher. You'll see that we also have a Goods Received voucher import shipment. This is when you receive goods from multiple purchase orders from a single supplier. And then we have a combined import shipment, which is used when you create a goods received voucher for multiple suppliers and multiple purchase orders and a single set of clearing documents. In this case, for the purpose of this video, we've created a single purchase order, so we can just have a look at a normal import goods received voucher. You'll enter the invoice number for this purchase order and also change the exchange rate if necessary. So let's quickly do that. I'm keeping the exchange rate as is. You'll then add the charges in Rand value or the currency you're doing by clicking the Charges button. You have a total of 10 invoices that you can add to these charges. I'm just going to add the one for now. Let's do the freight cost. After this, you can do the costing. It's going to attribute by value per item by adding the charges. You are able to edit these values as required. I'm happy with everything, so I'm just going to leave it as is. The total of the goods received voucher must balance, so you are able to change the values of items and charges, but once it does not balance with the total as displayed at the bottom of the window, you will not be able to save the goods received voucher. Once you're happy, go ahead and save the goods received voucher. I just want to give a quick rundown on what it would look like to do a normal supplier goods received voucher. You'll go to Enter Supplier GRV and start by entering the appropriate purchase order number. Remember, you can use the search function here again, so I'll go ahead and do that. All the appropriate information will be pulled through, and you can edit as you deem necessary. Once you're happy, you can go ahead and save the goods received voucher. It's as easy as that. Let's continue looking at the process by working with the import goods received voucher that we just did before the normal supplier goods received voucher. Now that the goods received voucher is done, we can go ahead and scan the serial numbers to the goods received voucher. Again, you enter the appropriate goods received voucher number and enter the serial numbers either manually or via range scan, whichever suits your requirements. Now that's completed, your goods are received and your serial numbers are allocated to the items you purchased. Now, just to see the information that you have, you can go to Normal Stock Transactions to see your stock movement. There you'll be able to see the goods received voucher that you have just done. You can view the goods received voucher by double-clicking on the appropriate transaction. You can also look at the serial numbers by going to Document Query, under Serial Numbers. Select the document type and enter the goods received voucher number. There you'll see all the serial numbers allocated to the goods received voucher. You can see in which stock location it is, the stock type, and so on. You can also query the serial numbers. Just enter the appropriate serial number. You'll be able to see it came into stock with a goods received voucher. It is in stock. You can see the stock location, and so on. As you start using this serial number, for instance, when selling it, you'll be able to see more information like the history or the out document, and so on. There's also a quick view to query a serial number under the File menu item. This works well for sales personnel. Just enter the serial number There you can view information about the serial number, for instance the warranty and so on. This comes in handy when a customer calls and asks about the warranty, for instance. I just want to show you what it looks like if we sell the serial number. I'm going to create an invoice. So you'll see you don't have to create a sales order first, but you can set the system to force a sales order to be made, so you would not be able to just create an invoice. But for the purpose of this video, let's just do an invoice. So you'll start by entering the customer you're selling the item to, enter the rep code, and scan the serial number to the invoice by clicking on the Scan Items button, clicking Allocate, and entering the serial number. Then generate the invoice. Click Accept, and accept again. Now if I hit Ctrl F5 and query the serial number, you'll see that the item has been sold. It's out on this invoice, it's under warranty, and you can even view the invoice. So if the customer calls, any person with access to the shortcut can quickly call up the item and say yes, it's under warranty, etc. Okay, so let's look at the scenario when the customer brings back this item you've sold. You can either do a swap out because it's still under warranty and you have stock to replace the item with, or you can book it into the workshop. If you do a swap out, you'll enter the old serial number and enter the new serial number that you're giving the customer. You enter the reason why in the fault description window that pops up and save. With this process, there won't be an invoice or credit note. If you go and look at the customer by doing a debtor account inquiry, you'll see when you look at the invoice, the new serial number will be on the invoice that was previously created. And if you query the return serial number, you'll be able to see that it is now in faulty stock. You'll be able to view the swap out document, where you'll see the old serial number and the serial number it has been replaced with. So if you go and look at your stock holding with the stock count list under the inventory menu, the returned item will be in faulty stock. You can also have a look at specifically faulty stock transactions under Creditors and enter the item number. It came in on a swap out, and again you can view the document as well. After this process, you can send the item back to the supplier by going to Creditors, Faulty Stock, and Send Stock to Supplier. You'll scan the faulty item and save. A supplier delivery note will then automatically be created. So when you receive the item back from the supplier, you can either receive stock from supplier under the faulty stock menu item, or you can receive credit back. Now if you receive credit back, the item gets written off and the credit gets put into your account. If you receive the stock back, the item goes back into normal stock. So let's do that option. Enter the supplier account number and select the item and save. Having received the item back, we also need to scan the serial number again. You'll go to Receive Stock from Supplier, under the Serial Numbers menu item, and just scan the serial number that you received back. The system won't know the serial number as it is new, so you'll just select Swap from the window that comes up and select the item it was swapped out for. When you query the old serial number, you'll see that it has been replaced by the serial number you just received. You'll now see that the serial number is in written off stock. When you do a document query on the goods received voucher, you'll see that the old serial number is now sold and the new serial number is now a normal stock ready to be sold. Okay, so that is a quick overview of buying stock, receiving it, selling it to a customer, and the customer bringing it back and you do a swap out. Then sending it back to the supplier and receiving a new item from the supplier. Let's have a look at the scenario where a customer brings back an item and you have to book it into the workshop. You'll create a customer repair order. You'll enter the necessary details like the priority, order date, and so on, and then enter the appropriate serial number. The history of the item will be in the system, and the customer details will be present. You can have up to 20 items on one customer repair order, but it would be better to keep it at one item per CRO to be able to track the item better. Now you can assign a technician to the customer repair order and enter the fault. Once you're done, you can go ahead and save the CRO. The first 4 items on the reporting list pertain to the job cards. So if you click Outstanding CROs, it will give you a list of outstanding jobs. In this window, a new technician can be assigned. The technician can then list any jobs that have been assigned to them and view the details of the jobs. The technician is able to add a new note to the specific CRO as well. Once a CRO has been created, you'll be able to send the customer a quote for the items to be repaired. So you'll create a quotation and enter the relevant CRO number. You'll see that the information will be pulled through. You can then add labor, for example, and save the quotation. When you view the report and view the CRO, you'll see the log will state that a quotation has been entered. You can go and amend the job and change the status to waiting for customer. There's also a short way to change the status of a CRO. You can just go to CRO status, call up the CRO, and change the status. If the customer, for instance, rejected the quote, you can go to Complete CRO and change the status, and the job will be marked as completed automatically. Or you can change the status to completed and enter the work done and save the changes. When the customer has, for instance, accepted the quote, you need to add the expenses like, for example, labor and the amount and so on, and make sure it's marked as completed. When looking at CROs ready for collection, the CRO will be pulled in this report, but you won't be able to close the CRO because the invoice is still outstanding. You first have to create the invoice. So you'll enter the appropriate CRO number and accept the invoice. Once this is done, you can mark the CRO as closed. Now it will be out of your reporting. If it is marked as completed, the CRO will still be on your reports until it is marked as closed. There is another side when it comes to returns from a customer. You can create a returned merchandise authorization. Returned merchandise authorizations give your customers permission to return an item for credit. The end result of an RMA is a credit note. To give an overview of the process, you'd start by creating an RMA in order to give the customer an RMA number. The sales rep would put in the info, items and quantity and the price. Then you'll receive the items. Then you can send it for testing. Then you can complete the RMA. And lastly, you'll create the credit note. Now the RMA number is the source for the credit notes. You can also then change the status of the RMAs, remove them and so on, and pull specific reports on it. Just a quick note when looking at an import supplier. When you do a creditor account inquiry and enter the appropriate supplier account number, you'll see at the top of the screen that you can see the profit or loss you're making based on the exchange rates you've entered. You can also toggle between the currency being displayed on the screen. So if you want to look at Forex gains and losses, you can set the foreign account up to automatically recalculate. You do this when you create the account or later on when you deem fit. So let's call up the foreign account. You'll see under Financial Detail there will be a flag, Automatic Currency Evaluation. That needs to be set to Y, which means when you roll over to the new period, it will automatically recalculate it. It is important to note that when you do any transactions that involve foreign accounts, you have the ability to set the exchange rate for that day. You are able to set the default exchange rates on a daily basis that is already calculated when you do trade. It's up to you how you would like to do it. Okay, so what I've shown and discussed so far covers the basic features that most of our customers use on a daily basis. But note, there are many more. If you have any additional questions, please don't hesitate to contact us. I just have a final feature that is quite important to mention that doesn't necessarily fit into the flow of normal trading. I quickly want to mention user rights, as this might be important for the running of your business processes. When it comes to user rights, you can give each user specific rights to be able to view certain menu items or be able to use certain functions or not. The options are quite diverse and give you a lot of control. When you have created a profile for a sales rep, for instance, and you want all of them to have the same rights, you do not need to recreate everything manually. You can just import the rights of the first user you created. So that wraps up the demonstration video. I hope it has given you some insight into what you can do with our Fincon accounting system. Again, should you have any questions, please get in touch. Thanks for watching and goodbye.